Assalamu alaikum everyone. My name is Faisal and today I will be talking about why do I think that we're not in a bear market. If you're a person who basically believes that this is a bear market and you don't want to listen to a second opinion, this video is not for you. But if you're a person who wants to look at the other side and see, okay, what if this is not a bear market? I think it's a bear market, but what if it is not a bear market and there is a bullish case too? Then this video is for you. And if you are a bull like me, a person who believes that this is still a bull market, then this video again is for you too. This will basically confirm your bias. I've spent like a few weeks of research on this video. And the reason why I say a few weeks is because there's lots of economical data, macroeconomical data that came in. And, basically it confirmed my bias. Now, a few weeks ago, I'll post a screenshot. A few weeks ago, I talked about how I think that we are in a bull market and why I think that we are making a bottom. I basically mentioned that it's going to take about 20 to 30 days to create a bottom. And I basically compared this price action to March and April of 2025. Basically, there were multiple sweeps of the lows, and then it bottomed at 74.5 or something like that, 74.7, and then we went up to 126K. So what I personally believe is that we're creating something like that. It took like a month or more than a month to create a bottom, and this is technically what we are doing right now. There was down, up, down, sweep of the lows, and then up. Again, down, up, down, sweep of the lows, and up. So basically, that's technically what we're doing right now. Obviously, this could just, instead of just sweeping the low, it could just break down and go to hell. But that's not a realistic outcome. Even if a person says that, okay, we're in a bear market, we're probably going to sweep the low, and then, maybe go up here and then just continue down for the next year, which I don't think that's the case. I don't think it's going to be the case, and I will give you reasons why. So there's a reason why I'm not calling it a bear market, and which is one of the reasons why I created this presentation. I called it apathy. Now, reasons why we're not in a bear market. What is a bear market? A bear market is a situation when the stock market experiences price declines over a period of time. Generally, a bear market is declared when the prices of S&P 500 and NASDAQ are down more than 20% for an extended period of time. For crypto, Bitcoin and Ethereum need to dump more than 50% for an extended period of time. That's what I think a bear market is. Because right now, Bitcoin has dumped 36%, and if we sweep the lows, 36%. And if we sweep the lows, let's say it might go up to 40%. Who knows if we go to $75,000, yeah? We have done 30% before, right here, 32%. And then right here, 32%. So a 30 to 40% dump does not make it a bear market. It's literally the same as what happened here and what happened here. It would need to dump further in order to confirm that this is a bear market. And we will still maintain a bullish structure even if we just bounce from here after sweeping the lows. So it's still a bullish structure. And in 2021, we had this massive 50% dump on Bitcoin, 56%. And then we created a new all-time highs after that, a few months later, $69,000. And that's one of the reasons why I think we're not in a bear market. Because this was not an extended period of time, even with 55% dump. We just created a new all-time highs a few weeks or months later. And in 2019, we dumped about 53% right here. Now, the reason why I will not include the COVID dump, because that's a black swan event. That's an irregular event. If this didn't happen, we were in a good scenario, like we were doing well. maybe we might have gone a little bit down, but this was because the world was thinking that it's going to end. We all remember how the world was panicking during 2020. Even gold was down, oil was down, bonds were down. Literally every single thing during this time period was down. So it was an irregular event. Unless a meteorite hit us again, unless we have something like that again, we're probably not going to have that. So, yeah, I mean, 30-50% dump on Bitcoin is something common. It's not something unheard of in a bull market. And you might say, oh, basically, even with this COVID dump phase, why are you ignoring it? We went to 3,900 here, and the bottom was at 3,100. So it was still above the bull market bottom. So this is where the bull market started, basically. And this is what happened. So a 30-40% dump doesn't dictate and make it a bear market. That's what I'm basically saying. The reason why people are screaming more right now with a volatility that is basically the same as every single time is because altcoins are dead. And secondly, there are lots of newbies who haven't experienced these kind of volatilities before. A lot of times, people scream a lot at the extremes. They're massively bullish at the tops. They're massively bearish at the bottoms. That's basically how the retail works. That's basically how the sentiment of people work. I'm a human being too. I know how human emotions work. Sometimes even I get it wrong. But this is basically what happens. So you have to go against the herd in order to, make money. And that's what the institutions do. They buy the mean reversion. I'm not going to explain mean reversion here. But since I don't want to also drift against the topic. So yeah, I mean, 30-40% dump doesn't make it a bear market. Not even 50%. It needs to be 50% for like multiple months, because just like this is what happened in 2022. This was, I think, 50% right here. Yeah, 50% right here. And then obviously I don't need to give explanation of 294 days below that 50%. And it was an 80%, 70 to 80% dump. And the same thing over here. We can say this is a 50% dump. I mean, this was 70%. And then we chopped around here in 2018 for like a few months. So that's a bear market. This is not, I mean, this is too premature to call this a bear market. And bear markets suck. They don't just go down. Okay, now, the reason why this is not a bear market, apart from the 30-40% down, bear markets require euphoria. We do not have euphoria in the year 2025 for crypto. In fact, when Bitcoin was at $126,000, people were wondering why the hell are altcoins not going up? And when will we have all season? So in my opinion, we are not in a bear market, and you cannot have a bear market without euphoria. One thing's for certain. If you actually have traded crypto in the year 2025, you cannot claim that altcoins did well in 2025. Like that, if you claim that altcoins did well in 2025, you're basically lying. I don't know any altcoin that did really well except for Zcash in the year 2025. So altcoin market was absolutely cooked in 2025. In fact, even Ethereum went to $1,400 in April of 2025, and then it recovered and went to 4,900, created a new all-time highs. But altcoins didn't do well in 2025. This is something that we all can agree on. It's not like 2024. I know a lot of you have never traded 2024 or 2023. I've traded them. I've even traded 2021. I know what euphoria feels like. In 2021, they were buying NFTs for $60 million. That's euphoria. In 2025, everyone is calling for a bear market. That's not euphoria. That's fear. Okay? So this is not euphoria. And even if we go to yearly candle, Bitcoin is negative on the yearly. Literally. In which world is this euphoria? It's a negative on the yearly. It didn't even move. Like, the volatility was like absolutely dead from the yearly open. The yearly close of 2024 was 93 0.5, and the yearly open of 2025 was that exactly. And we only went up 35%. In what world is a 35% pump on Bitcoin euphoria? Because it has done 177% here, 80%, and then 172% here. And if we take 2021 euphoria, it did about 150. And then if we take 2017, it's going to be a lot. Yeah, so we don't even need to look at it. And you can see for the whole year, if we just ignore this, like as this doesn't exist because this is so dead, this is like literally nothing. We have been going sideways for 1 year. That's literally what happened in the whole year. In what world is this euphoria? This is not euphoria. I have not seen 1 person going, this is the best bull market ever. Literally, 99% of the times I've heard, this is the worst bull market ever. So we have not had euphoria. So yeah, bear markets require euphoria. We did not have euphoria. We did have euphoria on gold, silver, and S&P 500. We did not have it on IWM, basically low cap stocks, but we did not have euphoria in crypto at all, including Bitcoin. Now let's discuss Newton's third law of motion. For every reaction, there is an equal and opposite reaction. Now, if you deny this, you're basically denying science. And a lot of people don't really understand there is science and maths involved behind everything going on with the market. There's real demand, real supply going on. So when there's no euphoria, you cannot have fear, like extreme pessimism, extreme fear like you had in 2022. During this FTX crash, I remember it vividly, when Bitcoin went to $15,000. I was also one of the people who were saying that $20,000 was not the bottom, or basically this $17,000, $18,000. I might show you the tweet, And so basically right here, FTX crashed, and every single person in the world was calling crypto a scam. There was extreme pessimism. People believed that there will not be any bull market for years. We did have a bull market, but there was extreme pessimism back then. Like, people were going crazy. Like, people were like, oh, there will never be a bull market in crypto again, because crypto is a scam. That's what people believed back at 15K. So yeah, we don't have that kind of pessimism. Obviously, it is one of the worst, but we don't have that kind of pessimism because we did not have that kind of euphoria. We don't have that much participants. And yeah, so in order to have that kind of bear market, you need that kind of action. So that's why Newton's third law of motion, for every action, there is an equal and opposite reaction. Since we did not have euphoria, we will not have extreme pessimism. Now, this is Wall Street's cheat sheet, Psychology of Market Cycle. You might find it on Google. You don't have to pay hundreds of thousands of dollars for this chart. This is free. You can find this on Google. Just search the same thing. So you can see how there's disbelief, hope, optimism, belief, thrill, euphoria. We did not have that in 2025. We did have that in 2023, but not in 2025. If 2024 was the bull market top, then we would not make a new all-time highs in 2025. This is a weird bull market that we're in, and I'll explain why, which is basically because of apathy. And then you have complacency, and then, all of this bullshit, anxiety, denial, panic, anger. So, and then after depression, which is basically exactly what 2022 was, there's a disbelief, like this is a suckers rally. There's no way we're going to pump. There's no way we're going to have a bull market, which is exactly what happened in 2023. I couldn't even tell people I was doing crypto because it was embarrassing. Like, that's how bad 2023 was. It is literally before Trump became massively bullish on crypto, before Trump talked about crypto, no one liked crypto. No one liked crypto. And a lot of you, I can say this with confidence, a lot of you came into crypto after Trump talked about it. I mean, say that it's a lie. You cannot say that it's a lie. Even if you traded in 2021, 2022, you definitely left for a period of time and came back after Trump was basically massively bullish on crypto, like out of nowhere, you know? So, yeah, I mean, that's what basically happens. This is not what's happening right now. Okay, so where are we? The crypto market is going through apathy. Apathy is when people lose interest in something. Currently, this is the case for most participants in the market, as crypto isn't even considered to be an attractive asset compared to AI and precious metals. In fact, Bitcoin has gone negative twice this year on year to date, and is currently negative. And it hasn't created an uptrend at all, which is true. Bitcoin was only up because of constant buying from ETFs, DATs, which is basically treasury companies like MicroStrategy. And I did mention MicroStrategy. You cannot claim that the crypto market has seen euphoria in 2025, which is basically what I discussed before. The situation is so bad that if anyone talks about anything bullish, they get instant hate. And that's true for me right now. Whenever I say that this is a bull market, people start screaming at me. I'm like, bro, I'm just stating facts. You should be able to stomach another person's opinion, yeah? So, if you talk about this market being bullish, you get hate. You get people saying that you know nothing. You get people like ripping you apart. And that's what's basically happening to every single person who's bullish. And including me, I even lost followers for being bullish. But I have to stay. I'm here to make money, just like you all, and I cannot just support an opinion which is wrong. 50-week moving average, 4-year cycle, blah blah blah. Well, I cannot support that opinion, and I will give you the reasons why later. This is something I've seen before, like 7 times this bull market. So no, it doesn't make any sense. So yeah, I mean, right now, even if I say it's bullish right now, you probably think I'm crazy. A lot of people text me, ask me, how the hell am I bullish? And I'm like, bro, I've been in this longer than you. I know, I've seen this many times before. They talk about Japanese yen carry trade as if it didn't happen back here. And we're up so much from back then. Yeah. It happened literally. Japanese yen trade happened back here in summer of 2024. Just go search for yourself. Yeah. And all of that bullshit that they talk about. So it did happen back here. What are you talking about? Back here, people were like, this is the bull market top. Yeah, we had the ETFs, and now ETFs demand is going bad. There was BlackRock selling at the bottom, like literally right here. BlackRock was actually selling. Do you know that? You don't. So BlackRock was selling back here. Like every single thing, all of the kind of FUD that you see today. Maybe even Tether FUD. I don't remember if there was Tether FUD, basically USDT FUD. But they asked me, oh, how are you so normal? Why do you think it's bullish? I was bullish back here. What do you mean I was bullish back here? What do you mean how I'm so bullish? I've seen this many times before. Being bullish at $15,000, $20,000 is way more scary than being bullish at $86,000. So yeah, I mean, there's so much data to prove why I'm bullish, which is something I'm going to discuss further. But yeah, one thing's for certain, out of like 10 people I talk to, at least 9 have, or maybe 9 might be an exaggeration, 8 have left crypto. And if there's like 2 people who are in crypto, they're basically waiting for the price to go to break even so that they can sell and never come back to the market. That's the kind of situation we're in. If you're watching this video, don't you ever think, oh, maybe I just want to go back to the break even. I don't even want profits. That's the kind of sentiment we're in. I just want break even. I will probably sell and never come back again. Yeah, I've heard this a million times. So yeah, I mean, this is what's happening right now. 4-year cycle is dead for this cycle. Now I'm being controversial because a lot of people are discussing 4-year cycle as if it's the holy grail. But I'm going to discuss why it's dead for this cycle. And it makes no sense for people to talk about 4-year cycle. No. The 4-year cycle depends on the business cycle, and the business cycle in the last 4 years have never been worse. I'll show you that. We didn't have a boom in the business cycle. Bitcoin 4-year cycle isn't something written in the code. It is something based on the business cycle driven by liquidity. So if you never had a business cycle boom, you didn't have things necessary to validate a 4-year cycle. The business cycle has extended, which is something we will discuss today. Now, let me explain what Fourier cycle is, because a lot of you don't know what it is. Fourier cycle is usually 3 years of bull market and 1 year of bear market. The bull market started at the end of 2022, November 2022, basically. In 2023, Bitcoin went up 171%. In 2024, halving year, Bitcoin went up 156%. In 2025, according to Fourier cycle, Bitcoin was supposed to go up, but it is currently negative on the year, like I've showed you. The third year of bull market is always parabolic, but this time it went negative, which has never happened before in history. This automatically cancels the Fourier cycle because Bitcoin never even respected the Fourier cycle in the first place in this cycle. As you can see, if we go to the yearly candle, actually Bitstamp doesn't have all the data. Let me go to Bitcoin history index. Okay, now let's go to yearly candles and okay, so is this yearly? Okay. Now, this is pre-exchanges. A lot of people don't take this 2011 cycle or pre-exchanges. So let's go from 2012. 2012 right here. 1, 2, 3 years of bull market, 1 year of bear market in 2014. 1, 2, 3 years of bull market, 1 year of bear market in 2018. 1, 2, 3 years of bull market, 1 year of bear market in 2021, 2022. And then 1, 2, where's the third year of bull market? I don't see it. Like, where is it? I mean, this should be green. Where is the green? I mean, I don't see it. Like, do you guys see it? No, you don't. So it basically automatically cancels the Fourier cycle. Like this cycle, Bitcoin didn't even respect the Fourier cycle. In fact, I think halving was on April 2024, and we created an all-time high in March 2024. We never created an all-time high before the halving. It never happened before. Basically, I think the halving was somewhere right here in May 2020, April or May 2020. This is where the halving was, and we did not create an all-time high. You can see this was the all-time high. We created all-time highs like maybe next year, like that's or the end of the year. And the same thing back here. This is, I think, somewhere where the halving was April, May 2016, and the all-time high was created, I mean, a few months later than that. Yeah, I mean, 1 year later than that. So we created an all-time high already. We technically broke the Fourier cycle a little bit back here by creating an all-time high before the halving. The halving was somewhere around here. So yeah, we technically broke it before the halving. I might have gotten the dates wrong a little bit, but we did break the all-time high. Sorry, we did create a new all-time high, not break. We did create a new all-time high before the halving, which is something that's never happened before. So this is the first anomaly of this Fourier cycle. Yeah. So this is the data of 2025, okay? In 2025, Q1, which is basically the first quarter, January, February, March, negative. Second quarter, positive. Third quarter, positive. Fourth quarter, negative. Now, there's usually differences in Q2 and Q3. These are low liquidity periods. It doesn't matter as much. But Q1 and Q4 matter a lot. Now, the first quarter was negative, which is usually positive in the bull markets. In the bear market, obviously, it's going to be negative. And this is when the COVID thing happened. So this can be ignored. And 2018, which was the year of bear market, this is when the bull market was starting in 2016. And 2014, the year of the bear market. So basically, Q1 is usually positive in bull markets. Yeah. And we have an average of 51%. But this year, Q1 was negative. So that's another anomaly for the Fourier cycle. And then Q4 is actually much better than Q1. It's probably the best quarter for Bitcoin. You can see the average is 77%. And we're down 20%. 20%. Yeah. So that's another anomaly. 2024, we were good. 2023, we were good. 2022, obviously, the bear market. 2021, we were good. This is when the bull market topped. Even then, it was green. And then 2020, obviously, we were green. 2019, I think this is basically what's happening right now. Apathy. We were in apathy in 2019. So it makes sense why we're doing the same thing. Yeah. And 2018, obviously the bear market, and you can see 3 straight years of Q4 being good, which is basically what the 4-year cycle is. And then 2014, again, the bear market, 2013, bull market. So in the bull markets, Q4 is amazing, okay? You can't even use the argument, oh, the bear market started then. No, because if we're going to use that argument, we would have to use the argument that maybe 2025 itself was a bear market year. I mean, for altcoins, it was. Ethereum did kind of make a bear market price action by going from 4,800 to 1,400. Basically went to bear market lows. Bitcoin didn't because of treasuries, ETFs, blah, blah, blah. So 2025 was technically the bear market year. If we go by that argument, which I don't think it is not a bear market year because even the stocks have bear market with Bitcoin. Apart from 2014, because in 2014 we had the bear market due to Mt. Gox imploding. So yeah, I mean, it doesn't make sense. The 4-year cycle, Bitcoin didn't even respect it in 2025. So why didn't the business cycle boom yet? The biggest reason why the business cycle didn't do well in 2025 is tariffs. Tariffs boosted inflation so much that it destroyed growth and made it difficult for the Fed to cut interest rates, which helps the business cycle. It's not just altcoins, even low cap stocks suffered, where you can basically check IWM. In fact, S&P 500 was mostly carried by AI stocks. Trump's approval rate has dropped massively in 2025, according to The Economist. The only reason S&P 500 was up is because of AI stocks. Apart from that, a lot of stocks did not do well, and especially low cap stocks. And even the businesses in 2025, you hear people complaining about jobs. You hear people complaining about not being able to pay rent. You hear people talking about affordability. Do you think people will talk about affordability or not being able to pay rent when they have an influx of money, when they have like a lot of money? You won't. Like it's irrational. So people are talking about stuff like this. Let's ignore the market. Let's ignore S&P 500. Let's ignore crypto. Why are people screaming about mortgages? Why are people screaming about affordability? I'm not even being political. This is actually the truth. Why are people screaming about rentals? Not being able to pay rent? Why are people screaming about housing prices being extremely high? I mean, currently it's going down, but it's still very high. Why aren't people talking about that? It's evident. Tariffs. Now, this is United States ISM manufacturing new orders. Now, new orders basically represent the buying power of retail or people like us. Yeah. This business cycle is the worst in decades. We have been stuck for 4 years. Now, above 50 is usually considered good. Yeah. We were about to hit above 50. We went to almost 55 when Trump took the office. And after that, it plummeted because he started the tariff thing with Canada, Mexico, and then with the whole world, Liberation Day. So, but first he started with Canada and Mexico because of fentanyl. So as you can see, that we've never been below 50 for 4 years. Like before, like it has never happened. Obviously, we've gone deeper, like right here. That's because of recessions. But we've never been stuck. Like that's the reason why I'm calling it apathy. It's stuck. People are not interested. Like people have money, but they don't have influx of it. It's not like people are being kicked out of homes. It's just that it's so difficult, like paying rent, and unemployment rate just pushed to 4.6%. A few days ago, like the data came out. It's not like it's at 8 to 9%, just like it's usually in recessions. It even goes to 15, 16%, but right now it's at 4.6%. So we don't have that kind of problems right now, but we have been stuck for 4 years. So if AI was not pushing it up, we would be down even lower. I mean, we don't know how lower we would be. So AI is currently keeping it afloat. And if anything happens to AI, we're all cooked. That's how bad the economy is. And it's been bad for 4 years, ever since the Fed started hiking interest rates. But when it started to improve, when it started to create that beautiful uptrend, when it looked like it was all going to be all right, Trump announced Liberation Day tariffs and everything like that. One of the worst tariffs in 100 years. So that basically cooked the economy because tariffs are stagflationary. They increase the interest rates. They increase the inflation and reduce growth. That's what tariffs do. It basically kind of destroys the market. Ignore S&P 500. We're talking about the basic economy. Like, if you're a person who studied economy for even a little bit, you would basically agree with the fact that tariffs is actually bad. It creates stagflation. I have no political agenda. I'm Pakistani. I don't care about left-wing, right-wing, Democrats or Republicans. I'm in Pakistan. Your rules don't affect me. The only reason why I'm talking about this is because I'm trading, I'm investing. Okay? So I have no political agenda. Trump's tariffs destroy the economy. And this is something that we can all agree on, unless you're extreme right-wing and you don't see reason. Yep. So Trump's tariffs were really bad. I mean, it basically cooked people. How the hell is this not a bear market? Now, Bitcoin has dropped 20 to 35%, 7 times in this bull market, which I've shown before. This isn't first time Bitcoin dumped this much. The only reason people are screaming is because altcoins are in hell. This is something I've discussed before. Oh, but the 50-week moving average. Okay. This is the big thing. Like, people have been telling me left and right, Bitcoin lost the 15-week moving average. Okay, I will explain that. None of you knew about 50-week moving average before Benjamin Cohen talked about it. This is true. Like, say that is a lie. Say that is a lie, that Bitcoin goes into a bear market by losing the 50-week moving average. None of you knew before Benjamin Cohen talked about it. And do you think a simple moving average dictates the price action of Bitcoin? I'll explain why we had bear markets before. Because it was not because of 50-week moving average. In 2014, we had a bear market because Mt. Gox, which was an exchange, imploded, losing 850,000 Bitcoins. That basically, in the terms of losing the amount of coins, it was probably like as worse as FTX. Yeah. So Mt. Gox imploding, basically, especially at the time when the trust in crypto is really small. In 2014, no one trusted crypto as much as they did in 2021 and 2022. And in 2014, I was probably playing on Xbox 360. I was a kid. So back then, I didn't even know what Bitcoin was. Like, what would you expect from a kid, a teenager? Okay, so we had a bear market because Mt. Gox imploded, losing 850,000 Bitcoins. So when that happens, it makes sense why a bear market would exist in the first place. Because the stock market did not have a bear market in 2014. We can actually check it. S&P 500 did not have a bear market in 2014. In 2018, we had a bear market because the Fed was hiking interest rates. Again, let me show you. Yeah, you can see the Fed started hiking right here, and then when it got to extreme levels, obviously the QE was going on since 2009, yeah, or like looser monetary conditions. But I think this is during the time of Janet Yellen, and when Jerome Powell became the new FOMC chairman. The same Jerome Powell right now. So the interest rates hikes, this basically scared the market, and it got to a level where it was uncomfortable. And that's why we had a bear market. And obviously when it went down, we had another bull market. And then the same thing in 2022. Now, this one was aggressive. This one was like partial. Like the market, it was a little bit easy for the market to absorb until it got to higher levels, because you can see this is 1.73, sorry, 1.75, 2%. It was like 25 basis points, something like that, push. But this was really aggressive. In 2022, it was really aggressive. You can literally see the interest rates went to 5.5, and this interest rates right here was 2.5. So it was like twice and more aggressive. You can see it was partial, and this was more aggressive in 2022. So this is the reasons why we had a bear market here and a bear market here. Come on, guys, it's obvious. So yeah, it was not because of 50-week moving averages. Look, the institutions, they don't sit on the screens all day looking at 50-week moving averages. Come on, are you guys serious? Like the whales will look at 50-week moving averages that you drew from your crayon and then like, oh, it's a bear market. No, that's not what happens. They look at the macroeconomic, like I said, maths, science. You're basically, that putting that aside, you're putting supply and demand aside and going like, oh, 50-week moving average. Supply and demand creates price action. That's what creates price action. When you have the Fed hiking interest rates aggressively, you'll be like, okay, the monetary conditions are getting strict. They're hiking interest rates. We have to pay back our debt. Let's just pull out of risk assets and probably go into bonds or something. That's what happens. Or, sometimes they even sell. But look, depending on macroeconomic conditions, I'm talking about bonds, by the way. So that's what they do. They get out of risk assets. They don't look at 50-week moving average. Oh, we should sell. It doesn't make sense, for God's sake, bro. Losing 50-week moving average. I will also show you like when Bitcoin disobeyed the 50-week moving average. Yeah. So losing 50-week moving average and gaining it does not confirm or deny a bull market. Let's be real. It's a moving average. You need macroeconomic conditions to back it up. Okay. So just relying on 50-week moving average is weak. And I can also prove that, by the way. If you go to lower time frame trading, yeah, and you use only 50 moving average, let's say you're on 1 hour, so it's basically 50 hours moving average, yeah. So try to use that in trading without any other confluence. You will destroy your portfolio. So yeah, I mean, supply and demand is basically what dictates a price action, not 50-week moving average. If you actually want to bet on a moving average alone, try trading it, try scalping with it. I'll see how it goes. Actually, you know what? Let's put it on a test. Yeah. This is, 50. This is 50 moving average. This is on week, which is basically something Benjamin Cohen used. I'm not disrespecting him, by the way. He's a legend. So yeah. How many times before, basically you would get a fake out? Like, for example, let's say you shorted here just because 50-week moving average was lost. You would have been cooked. Yeah? We spent multiple days below it. And then imagine you shorted here. You would have been cooked. So one fake out, this is another fake out, reclaiming. Doesn't mean it will go up. Another fake out, another fake out, another fake out, and obviously another fake out. I mean, another fake out, another fake. This is basically clear rejection, but yeah. And I mean, come on. By the way, this is on daily time frame. This is not weekly, okay? And yeah, I mean, the same thing. You can basically see here. Sometimes it does respect it. Like, for example, it respected here, here, here. But it's just using 50-week for trading. It doesn't make sense. Sorry, just using 50 moving average for trading. It doesn't make sense. It's actually stupid. Literally, it's stupid. There's no reason to use it. 50-week in previous instances made a lot more sense because that's exactly what happened. But like again, the confluence is, I'm not dismissing the 50-week moving average theory, which I think Benjamin Cohen is the first person to actually talk about it louder. And then after that, every single person started copying him. And yeah, he's been a legend in the past 3 years. But just using 50-week moving averages, it's not enough. Literally, it's not enough. You need confluences. You need reasons for the institutions to go, oh, okay, let's not buy Bitcoin. Let's sell it. That's what you need. Just using 50-week moving average alone to confirm or deny a bear market is technically useless. In fact, if you go to 2017, you would be down about 70% before the market could you would confirm that that's a bear market. You would be down 70%, okay, on 50-week moving average. Because according to what Benjamin Cohen says, you have to spend at least 2 weeks below the 50-week moving average to create a top. Yeah? So it's for it to be a bear market. So waiting 70% before it does that is stupid. Yeah? And you would have actually avoided this if you looked at the Federal Reserve hiking interest rates. You would have avoided that. And if you basically got the confirmation of euphoria, this is a euphoria. Yeah. So you have the Federal Reserve hiking. Now, let me explain how these bear markets happened. You have Federal Reserve hiking interest rates. That's massively bearish. You have euphoria. Now, that's an extension. Basically, I forgot the term that was used, but this is the extended price action. So mean reversion. Basically, it's going to go down. If it's going up, it's going to go down. Or even Newton's third law of motion. For every reaction, there is an equal and opposite reaction. So yeah, you had the euphoria, you had interest rates hike, and after 70%, you had the 50-week moving average confirmation. So yeah, no, it's not a good indicator to use. Secondly, especially after losing 70%. And then let's look at 2021. We were down 33% or even like 41% before we even got the 50-week moving average confirmation. Okay. Again, this could have been avoided if you actually looked at euphoria. Yeah. And secondly, there were talks about how inflation is going up high, and the Federal Reserve was discussing increasing interest rates, or even the 4-year cycle. Yeah, I mean, 4-year cycle was respected in 2021, and yeah, you also had 4-year cycle theory here. So with all of that, with euphoria, you can use 50-week moving average, but after going down 40%, not a good indicator. You're losing 40% already. This time it was a little bit different because this was only 20%, but I don't think it's a bear market. Now, the difference between this and this has interest rates hikes. This had interest rates hike, and a pretty aggressive interest rates hike, by the way. And this had interest rates cuts. You see a massive difference? This one had euphoria. This one had euphoria. This did not have euphoria. So there's a lot of difference. Just using 50-week moving average does not make sense. Okay, so I've talked about this. Okay, and you can see, like I've mentioned, how we've seen 20 to 30% drops 7 times. 1, 2, 3, 4, 5, 6, 7. This is the 7th time. So this is not something new. A lot of people are crashing. Oh, Bitcoin dumped so much. Yeah, Bitcoin did that 7 times in this bull market and then made a new highs a few months later. So this is not something new. And the 50-week moving average, we spent a few weeks below 50-week moving average in 2019. Spending 2 weeks below 50-week moving average is a bear market theory. Then, if imagine calling bear market here, I'm missing all of this. I don't even need to elaborate on that. Okay, so, and if we take COVID-19, now, especially with COVID-19 dump, this is when the world was thinking it's the end of the world. Okay, spending like, I don't know, 8 to 9 weeks below 50-week moving average, that's a bear market. It was not. It was a bull market. We just had a black swan event in between to shake people out and then just for Bitcoin to pump 20x after that. So, and then right here, we got rejected by 50-week moving average. We spent like about 2 months or maybe a few months below the 50-week moving average. Imagine not calling for a bull market right here. So when people use this as an argument, it doesn't make sense because you need confluences. You need evidence that, okay, this is going to change. We did not get that. So no, just using 50-week moving average alone, I've proved it. It does not make sense. Bitcoin, the reason why people are screaming their lungs out is because a lot of people have taken losses at like maximum level with this crash. Look at the spike right here. Even though it's like 30 to 40% just like this and this spike basically shows the fact that a lot of people sold. Like more than $5-6 billion was sold on that day. And that's a lot of selling, by the way. Right here is not something like that. Right here is not something like that. This is crazy. Like this is why people are screaming. This is why people are not interested. A lot of people sold, and I'm saying that from my experience. Out of 10 people I talk, 7 to 8, they might have sold. And like the 2-3 people who haven't sold, they're just waiting for the price to go to break even to sell. That's the kind of market we're in. And if I make a video saying that there's going to be an all season, and the market is going to pump, people crash out. People are like, yeah, this guy doesn't know what he's talking about. Okay, so I've basically explained so far that why 2026 is not going to be a bear market year. Now is the time to explain why in 2026 we're going to pump. Now, do remember, we are in the exact same situation as 2019. Rate cuts, and still the market looks like shit. The same kind of things. And if we also include Federal Reserve's assets, which is basically QE, I forgot the ticker name. Okay, yeah, this is it. Now, if we include the Federal Reserve assets, basically this is when QE or the money printing started, and we are basically starting it right now because the Fed has announced $40 billion of money printing every single month until April. That's $160 billion worth of liquidity. So it started right here and it started right here. So, I mean, it's kind of the same situation. Now, what's happening with the jobs? Officially, the US economy is still adding jobs, 60,000 jobs added. That was the case until the jobs data came out a few days ago. But here's what most people don't realize. If you look at ADP payroll data, especially for small companies, employment peaked around April 2025 and has been falling since. The real situation looks like between 24,000 and 40,000 jobs are being lost every month. I'll basically show you the charts right here. Unemployment rate went up to 4.6%. This, in the month of November, the payrolls went up, but these are sketchy numbers. Yeah, according to ADP, we're already in the negatives in the terms of jobs, and even Jerome Powell in FOMC mentioned this, that we're basically down 20 to 40,000 jobs per month. So it's alarming, and this is one of the reasons why he changed his tone from October's FOMC in December. Because if you remember in October, I don't know if you remember, but you can go and watch October FOMC. Jerome Powell basically said that interest rate cut in December is not a foregone conclusion. Like, it's not guaranteed. It's actually far from it, indicating that it might not happen. It was a really harsh tone. You might even hear him speak, and it was quite harsh the way he said it, like as if he was pissed or something. I don't know. He's usually a calm person. He doesn't make extreme statements. You know, he's not Trump. So I was quite surprised because I was like, what the hell are you talking about? The labor market is weak. People are losing jobs. Which data is he looking at? Like, what he said in October was quite stupid. Like, it pissed me off so much, which is one of the reasons why the market dumped in November, because of his tone. And then 15 days later, or like a few weeks later, the Federal Reserve members, they just come out and were like, oh, he was not talking that way. He was talking about how, it's not guaranteed, but we do still think it's going to happen. Now, that's a difference in tone. Now, if I say, oh, he didn't say, I don't think it's going to happen. He said, oh, it's not a guarantee. Actually, it's quite far from it. I don't see a reason why we should cut in December. Like, if I say like that, you're basically going to think that I'm not going to do it. But after a few weeks, you're like, oh, there's still room for rate cuts. Because if you listen to FOMC, it's available on YouTube. It's completely free. You don't need to pay anyone to get the FOMC, by the way. It's on the Federal Reserve channel on YouTube. If you hear that live stream, he mentioned it as risk management rate cut, okay? Which basically means that I'm just doing rate cut to be safe. Like, it's not going to happen. It's not going to be a continuation, yeah? That's basically the tone he gave. And in December, it's like completely 180. Now, I'm a random guy in Pakistan. I don't have PhDs, okay? I don't have a decade of experience in the Federal Reserve, because that's almost the time Jerome Powell has spent in the Federal Reserve, okay? Or maybe even more. I don't have that much time in the Federal Reserve, and I don't have the kind of data and surveys these guys are getting. Why the hell did I know that there's going to be a rate cut in December? And why the hell was I surprised from his tone? These guys know more than us. Remember, these guys know more than you and me. These guys are basically controlling our liquidity, our lives, by increasing interest rates, by decreasing interest rates, and all of that bullshit. It was so apparent. Like, people were screaming that they're not getting jobs. This is not some rocket science. This is apparent. Like, if they don't do it, we're cooked. If they don't cut interest rates, we're cooked. And if you go to a doctor, you would basically assume that the doctor is going to give you medicine to fix you. But instead of that, if the doctor just does the opposite, it injects you with a poison, you would be shocked. This is what Jerome Powell did on October. I don't know why. Maybe it was political. Maybe it was manipulation. Bitcoin did go from 100 something to $80,000 in 1 month because of his statement, and obviously a lot of other factors. But this statement did trigger a lot of that. And then randomly, when it's at $80,000, it's like, maybe we should start printing $40 billion per month until April, until the day his term as the chairman ends. Do you understand that? And he basically does cut in December, and he mentions how he's worried about the labor market. Like, how does that happen in 2 months? Can someone explain me? How does that happen in 2 months? Isn't that convenient that rate cuts didn't look attractive when Bitcoin was above $100,000? They look super attractive, but not even rate cut. Let's also add money printing. Let's add that. How is that attractive on Bitcoin? Is that a coincidence? Bitcoin at $80,000. And you might say, oh, why does he care about Bitcoin? Come on, BlackRock has an ETF on Bitcoin. I don't need to say more, yeah? Let's not go into conspiracies, but it looks sus. It looks sus. I do not buy it. Like, the guys who know about data way more than us, they get the kind of data we don't get. They talk to the banks. They talk to everyone. They talk to everyone. They even talk to the Bank of Japan, because apparently these guys were getting calls from the banks in the United States about liquidity crisis. And then they were like, oh shit, we need to act. So do you think these guys don't have contacts with each other? Like, they don't anticipate that? Like, come on, these guys have PhDs. They know what they're doing. They know what they're doing. They are on the highest seat possible. They are on the seat that even makes Trump crumble. Like, Trump has been screaming for rate cuts the whole year. He talks about how interest rates should be at 1%, and Jerome Powell didn't cut. This is how strong he is. He talks about firing Jerome Powell. The market dumps, punishing Trump's comments. This is how powerful he is. He cannot be blackmailed. I'm not gonna elaborate further, like what happened. This is not coincidence, okay? You know, like Bitcoin when it's above 100K, we're not gonna announce rate cuts. You know, it's actually it's not a foregone conclusion. It's far from it. And then when it's at 80K, oh, we're thinking about money printing. You know what? We're gonna cut interest rates too, and we're going to inject like $200 billion worth of liquidity by April, $40 billion or $50 billion per month. And even that depends. If the labor market gets worse, we might even print more money, because that's what he meant. You can just listen to December FOMC. This is so crazy. It pisses me off. Like, it's so apparent. The manipulation is so apparent. Like, come on. Do you guys think we're fools? Well, I mean, yeah. We're gonna print money. Now people are losing their jobs like he didn't know that already, yeah? So people are already losing their jobs, and this guy was like, you know what? We're not gonna cut interest rates. We're not gonna make your lives easier. But when the prices go down, stocks go down, Bitcoin goes down, oh, how about we, reduce the interest rates? Because that's a $3 trillion asset they're talking about, and something BlackRock is extremely bullish on, by the way. And randomly, also, JP Morgan starts announcing Bitcoin assets. And randomly, Vanguard, which was quite the opposite of in 2024, January, when they talk about how they're never going to give Bitcoin ETFs or never going to allow their customers to buy Bitcoin, how randomly they just backtracked and announced products for Bitcoin and announced basically their customers being able to get Bitcoin. Like, isn't that a coincidence after 80K? Like, all of this happened? I don't. Let's go. Let's continue further. I don't want to get into this. Yeah. I don't want to. But yeah. Okay, so why the Fed is worried? Normally, when jobs weaken, the Federal Reserve cuts interest rates. Inflation is at 2%, and Powell even said inflation is almost non-existent. Yeah, I forgot about that. So basically, Powell, what he said in December FOMC, he basically said that, which is also why I blamed tariffs for whatever is happening in 2025. He said that if we remove tariff inflation is like at close to 2% level, which is their goal. So basically, if tariff inflation is removed, they're already at their goal. So it basically makes sense for them to cut interest rates and start printing money. In October FOMC, he was talking about, I'm going to rant a lot about what Powell did in the past 2 months, which pissed me off. Past 3 months, by the way, sorry. In October FOMC, he was talking about, how there's a fog. Maybe we should slow down, like how there's a fog. We can't see. We don't have the data. Government shutdown. We can't see, why don't we just slow down? Why just drive quickly through the fog? And then in December, he just goes, somehow, there's a lot of data, October, November data that didn't come out. Yeah. And he was like, I just magically know that there are, like, according to our own surveys, this is what he basically said, according to our own data and research and surveys, we know that people are losing more than 20,000 jobs per month. And there's overestimation in the non-farm payroll data. Like, people are not getting as much jobs as the data suggests. How the hell did he know? I mean, didn't you know that in October? Like, what the hell are you talking about? Are you stupid? Even if you look at October non-farm payroll data, it was revised down from minus 60. Oh, I actually forgot about that. In October, there were like 60,000 jobs lost. And that data was revised down to minus 100,000. Minus 100,000. 40,000 more jobs lost than 60,000. So basically 60,000 plus 40,000, 100K. Revised down. Like, they were like, no, we didn't just lose 60,000 in October. We lost 100K. And Jerome Powell said that it's it's far from the conclusion that there's gonna be a rate cut. Like, isn't that stupid? He had that data. You do know that. The non-farm payroll data. And actually, let me check. When did the data came out? Because I was so convinced, that we're gonna have a rate cut in December. NFTinvesting.com. So October, basically on October we got September's data. Yeah. Okay. Yeah. They got the data. Sorry. October's data was released in December, but yeah, they had the September data. September data, by the way, the jobs went down to 22,000 from 75,000. Yeah. And in October, as you can see, I don't know if my camera is gonna let you see that, but we'll add the screenshot. In October, 105,000 jobs were lost. Like, you knew that this was, according to your own service, that there's overestimation in the job data. 105,000 jobs lost. This could be mostly because of government shutdown, but who the hell are you fooling? ADP was giving the jobs data. And these guys randomly, their surveys told us before that we're losing 20,000 jobs per month. Where were your surveys in October? Like, why the hell did you make that statement? It's so stupid. Do you know how stupid that is? Going to 22,000 jobs and not seeing a downtrend. It's so stupid. Okay. So yeah, $40 billion reserve management purchases. Now look, a lot of people are confused whether is this QE or is this not QE. Let me tell you, this is not QE. QE is basically when they inject 500 to 700 billion dollars, just like in 2020 COVID, when they inject that much money per month, and they do it for a large period of time. Yeah. So it's not, and they also drop the interest rates to zero, basically. That's what QE is. This is not QE. But this is definitely money printing, because the Fed just doesn't inject liquidity without printing money. This is money printing. So dollar's value is going to help. Now, I can show you basically DXY. DXY is dollar, by the way, US dollar currency index. And today it's positive, but since the FOMC is down, we can go to monthly. It's down on the month. So dollar gets affected by money printing. It's common sense. It's common supply and demand, or demand, however you might pronounce it. It's common supply and demand rule that if the supply increases and there's no demand, the value is going to decrease. And dollar, by printing money, you're basically decreasing the value of dollar. So basically, it's going to add money to the market by buying $40 billion worth of US Treasury bills every single month, because jobs are weakening, midterm elections are coming, and the economy can't afford a visible crash. Okay. Obviously, the Fed doesn't care about midterm elections, especially Jerome Powell, who is Democrat leaning. And a lot of Fed members are Democrat leaning, and Trump is Republican. So basically, these things, Jerome Powell doesn't really care much about midterm elections, but Trump does. And I will explain how Trump is going to counter it later. And I will explain how this was engineered. Okay, so midterm elections. So we have already established that the Federal Reserve is going to do $40 billion worth of liquidity. They're going to inject that every single month until April, until Jerome Powell's term ends. So he was massively dovish. He was the most dovish since 2021. Now, dovish basically means that, you support growth instead of looking for inflation. You're overlooking inflation. That's what dovish means. And we're going into a disinflation zone. Disinflation is bad. It's bad for the economy. So Jerome Powell does understand that in Q1, inflation is going to drop. And if inflation drops in Q1, why the hell is he not going to cut interest rates? Yeah. So that's one thing for certain. If inflation keeps on dropping and this inflation term becomes true, which I think is going to come true, and a lot of economists are considering that we're going to have disinflation in 2026. One of them is Anna Wong. I don't know if I got the name right, but she works for Bloomberg. She's massive in Bloomberg. She basically put on data on why we're going to have disinflation. Disinflation, according to economics, is bad. It's not good. The prices do start decreasing, but it shows that the economy is weak. People cannot buy stuff, because if people are buying stuff, there will be an inflation. But disinflation comes when people cannot afford stuff. So disinflation is bad. And she's talking about how we're going to go into disinflation. And disinflation is something both Trump and the Federal Reserve doesn't want. They want inflation to be at 2% level, but they don't want disinflation. So the economy is going towards disinflation if the Federal Reserve and Trump don't start acting and trying to stop it. Yeah. So, I mean, there's going to be more rate cuts. Especially, I remember 2024, the market was expecting like 4-5 rate cuts, I think. And then in 2025, they were expecting actually 6 rate cuts in 2024. I think at the start of 2024, and 6 rate cuts at the start of 2025. I don't think we've gotten 6 rate cuts in 2025. We got one in January, one in September, one in October, and so basically, 4, one in December. So we got 4 instead of 6. The market was expecting, I think, 5 or 6 in 2024. I don't think we even got 5 or 6 cuts in 2024. I'll have to check. And right now, they're just expecting 1 or 2 rate cuts in 2026, which is kind of stupid because we're going into disinflation. There's going to be a lot. People are losing jobs, so we need more rate cuts. Yeah. So midterm elections are coming, and Trump's approval rate is down at 42%. Democrats are gaining momentum. Now, Trump does call them fake polls, but I mean, from what we know, we're going to take information for what we know. We don't know any secret information. And this is the same for a lot of market participants. Democrats are gaining momentum because of voters' frustration. So the White House needs the public support. In order for that to happen, POTUS, President of the United States, needs the Fed to cooperate, markets to stay calm, and jobs to stabilize the market. There's also like very big evidence on why Trump's approval rate is down to 42%, because you might know people like Nick Fuentes, you might know people like Candace Owens, and many other right-wing people who are basically pushing for Trump. I don't think Nick Fuentes was pushing for Trump, but his voice is getting louder because I think he was against Trump. Candace Owens did push for him. I think Joe Rogan pushed for him. Paul Brothers pushed for him. Like literally a lot of people pushed for him. And they're all like backtracking. They're like, I did not vote for this. I regret pushing for this person. Yeah. That's what they're basically saying. So the approval rate is down. Nick Fuentes is getting more and more famous. He's openly talking shit against Trump, and he's getting more and more famous. Why is he getting famous? Because people relate to it. People actually accept what he says to be true. Okay? So that's one of the reasons why, if people like Nick Fuentes are getting viral, if their opinions are getting accepted, it basically means that this is how the majority of people see it to be. You cannot expect the left side to listen to people like Nick Fuentes or Candace Owens. So if they're openly talking shit about Trump, it basically means that the right-wingers are actually super angry. So the people who support Republicans, the people who supported the Republican Party and voted for Trump, voted for Republicans, they're pissed off. They're like, this is not what I voted for. I'm not going to go into politics. I don't care. I'm a Pakistani. I don't get anything from talking about politics. Yeah. So, and even Zohran Mamdani won elections in New York, and he talked about affordability. Like, I saw Elon Musk, Trump, going actively against Zohran Mamdani, and the Republicans were pushing Islamophobia against Zohran Mamdani, a lot of that stuff, but he still won. Simple reason, affordability. People cannot afford the stuff. It's so simple. Data doesn't lie, whether you follow politics or not. And just to be clear, I hate both the Democratic Party and the Republican Party for reasons I cannot tell in this video. I'm just going to say one word: genocide. Okay. So I don't want this YouTube video to be banned. So that's that's the biggest reason why I don't support any of these parties. Both these parties have played a major role in you know what. Okay. So yeah, especially when I'm a Muslim, you can basically understand the stance that I'm taking. So I don't care about Democrats or Republicans. I also even don't support Zohran Mamdani. I didn't even celebrate when he won in New York. I mean, I'm a Pakistani. Why would I? But a lot of Muslims were. I didn't. Okay, so we do understand the dilemma Trump admin is in, because if they don't fix it, they're going to lose the midterm elections that's going to happen in November of 2026. And if they lose midterm elections, there's going to be a lot of problems for them. They might face difficulties in passing, bills. They might have lots of difficulties. They're going to lose a lot of seats in the House. And if this goes on, you know who's going to sweep the seats in the House? Democrats. And Democrats don't want Trump to win. And they're obviously going to try their best to do the opposite of what Trump wants. Yeah? Because that's how politics work. So who's going to be the next Fed chairman? This is really important. Because by the time Trump announces the next Fed chairman, Jerome Powell is going to be almost irrelevant. Jerome Powell is ready to go in the mid of 2026, basically April, May. But who's next? 2 names are being discussed to replace him, says U.S. Secretary of Treasury. Basically, we wrote this about a few days ago, but in the past few days, there's another name that was added. So 2 Kevins, Kevin Hassett, Kevin Warsh. Kevin Hassett is a strong Trump supporter, the market's new favorite, which is true. You can basically check the prediction markets. If Hassett becomes the Fed chair, rate cuts become more likely, money printing becomes easier. And if Kevin Warsh becomes the Fed chair, policy could stay tighter and growth slows and the markets get nervous. Now, the third name that is added right now is Chris Waller. Now, at number 1, like the person who's most likely going to become the next Fed chairman, and the reason why we're putting him at number 1 is because Trump kind of like teased him becoming the Fed chairman in one of his press conferences. He basically was like, you know, congratulations, you're the biggest candidate for the Federal Reserve, blah, blah, blah. So if Kevin Hassett becomes the Fed chairman, you know, there's going to be a looser monetary policy, which basically means that it's going to accommodate everything that Trump wants, and Trump wants growth. If Chris Waller becomes the Fed chairman, Chris Waller is also dovish, not as dovish as Kevin Hassett, and he might be a little bit independent. Now, what the market considers right now is that Kevin Hassett is going to be, quote unquote, Trump's puppet. So he's going to follow whatever Trump is going to tell him, because he is White House advisor right now. So he works under Trump. So they don't like that. But Chris Waller is someone they prefer because intelligent people, like people who, institutions and people who are like well versed in macroeconomics, they want Chris Waller to become the next Fed president. No one wants Kevin Warsh. let me tell you, no one wants Kevin Warsh. He is hated. He is super hated. Like, he's been wrong so many times. So no one wants him. So we're in a win-win condition. Like, let's say there's 30-30 probability for all of them, 30% each. We're like 66%, we're good. Yeah, whether it's Kevin Hassett or Chris Waller, we're good. Yeah, because both of them are dovish. Kevin Warsh is, even if he says he's dovish right now, his past record is not good. Yeah, so the market doesn't want it. Now, there's a little bit of difference between Kevin Hassett and Chris Waller. The bond market doesn't like Kevin Hassett because he's been massively dovish. And if the Fed isn't independent, no one wants to buy the bonds. Technically, Trump wants the bonds to be bought because it makes the lives of so many people easier, including the US government. But Kevin Hassett is basically the opposite of that. Yeah, so the bond market doesn't technically like him until he changes his tone a bit and becomes a little bit independent. He isn't if he isn't considered as Trump's puppet. On the other hand, Chris Waller who basically has almost the same stance as Kevin Hassett. He is considered independent because he doesn't go to the extremes of dovishness. Yeah, he's he's been right about a lot of stuff. He was talking about how we should hike interest rates in 2021 when inflation was going high, earlier than the majority of Federal Reserve. And he's been dovish the whole year of 2025 he talked about how we should have interest rates cut. And he also did mention that Chris Waller, that we need interest rates to be down at least 1%, like about 1% from here. It's not a neutral level, it's restrictive. So these two people, if any of them get selected, they're all right. Yeah, they're not bad. Depending, of course, it still depends on the monetary policy that they choose. But yeah, these two people, I think the market will be all right. There are different conditions, if Kevin Hassett gets selected. We're going to ignore Kevin Walsh. There was also a survey between CEOs. I think 4/5 of them, basically, like out of 5, 4 of them wanted Chris Waller to become the Federal Reserve chairman. And then this is something that Wall Street wants already. They want Chris Waller because they don't want complete irrationality in the market. Even though it's good for short term, it's not good for long term. And then they were asked the question. I'll basically share that information with you as the screenshots. They were asked the question, who do you think Trump is going to select? And at number 1, there was Hassett. Okay. So they're probably all right with Hassett, but they really want Chris Waller. And technically we would want Chris Waller too, because if he's the most rational considered by the bond market would not punish. And when the bond market punishes you, it's bad, yeah? So the bond market would not punish Chris Waller as much as they would punish Kevin Hassett unless he's able to change their mind over the next few months. So Trump is basically going to announce the new Fed chairman candidate in January. So we have a month, and currently they're interviewing Chris Waller. They've already interviewed Kevin Hassett. They might keep on interviewing people. So, they're basically shaking between Kevin Walsh. Like, Kevin Walsh was not even discussed as much, but Trump made some statements about how Kevin Walsh could be a good candidate too, which basically is causing that volatility in the prediction markets. But I don't think he's going to get selected, yeah? And the Wall Street doesn't want Kevin Walsh, by the way. They don't want him. Like, no one wants Kevin Walsh. Let's say Trump announces Kevin Hassett or Chris Waller as the next Fed chairman. God forbid he announces Kevin Walsh. We don't want Kevin Walsh, yeah? God forbid. So basically, let's say, imagine, there's more probability of a dovish Fed chair. Like, Chris Waller and Hassett have more probability than Kevin Walsh. Like, there are two people. There's, like, if you talk in the probability sense, it's more probable that he's going to select someone dovish, especially when he prefers growth. If he's a maniac, if he selects Kevin Walsh, then everything I've discussed right now gets invalidated, okay? So, because that's how crazy that guy is. Depends on the monetary policy he chooses. Maybe he's dovish, I don't know, but let's see. Apart from that, let's say if Kevin Hassett or what was the other name? Chris Waller, yeah. If Kevin Hassett and Chris Waller gets nominated, anyone between them, we have the market getting excited. It's going to be like Trump winning the elections. But that's not everything, yeah? After Jerome Powell's term ends as a Federal Reserve Chairman in April or May of 2026, basically mid-2026, he will have the seat of the Fed governor until 2028. This is really important. This is something that you need to listen. If Jerome Powell doesn't resign from his seat as the Federal Reserve governor, the market could take it as a bearish indication. Now, this usually doesn't happen. Whenever a president announces the new Fed chairman candidate, or like basically who he is going to select as the new Fed chairman, Fed chairmans who are going to retire, they basically announce intent that they're going to resign from the Fed governor seat once their term ends. This is basically what Janet Yellen did before Jerome Powell was selected, and after he was selected, after his name was announced. And this is basically what most of the Federal Reserve chairmen did. And I think only 2 times there's been dissents, like basically the Federal Reserve chairmen, they were pissed off and they just stuck to the Fed governor seat, like almost 2 times, like 2-3 times. And it was back in before 1950s. So the trend is that that the Fed chairman resigns from the seat of the governor, after the new chairman is selected. So they basically resign. So we have 2 big catalysts for the market to pump. It's going to be the same as Donald Trump winning the elections. Kevin Hassett or Chris Waller getting selected, and then announcing the intent of resigning from the Fed governor seat by Jerome Powell. The market is going to go crazy when they hear this. It's going to pump. Basically, people will be happy. It will be like Trump winning the elections. Even if Trump was absolute shit in the year of 2025, people were happy when he won the elections. S&P 500, the whole crypto market, everything went up, before Trump took the seat. So everything could go up before Kevin Hassett or Chris Waller takes the seat in April or May of 2026. Okay. So the market will go absolutely crazy. So the first catalyst is the selection of a good Fed chairman, either Kevin Hassett or Chris Waller, someone between these two, who are dovish, who prefer growth over inflation problems. Yeah. These 2 people, if any of them get selected, that's the first bullish impulse. That's the first bullish catalyst. The second one is Jerome Powell announcing the intent of resigning from the Fed governor seat. I don't know when he's going to do that. Janet Yellen did almost immediately after that. Yeah, but Jerome Powell, I don't know when he's going to do that. And but when he does, the market is going to go crazy. It's going to be like Trump winning the elections. So basically, that's how it's going to be. So why 2026 matters? If Trump manages to stabilize jobs with $40 billion monthly liquidity, avoids a recession before midterms, and installs a friendly Fed chair, then 2026 might become the payoff year. Rate cuts, stimulus checks, $1,000 to $2,000, tax refunds. Basically, Scott Bassett mentioned that in Q1 of 2026, there's going to be $1,000 to $2,000 of tax refunds, easier financial conditions, and stronger markets. $40 billion per month is going to be done by the Fed, even with Jerome Powell. We don't know what Kevin Hassett or Chris Waller is going to do. That's something for them. And apart from that, what do we have? Yeah. We already have some kind of action from the Trump admin. Do remember, Trump admin is different. The Federal Reserve is different. We do have the action of $1,000 to $2,000 of tax refunds, which basically acts as a stimulus for the economy in Q1 of 2026. I think that's $150 billion worth of stimulus. We have that. We have the Federal Reserve putting in like $200 billion. And what else do we have? Okay, so we have these 2 stimulus types kind of things, and we have rate cuts because they need to cut rates. I'm telling you right now, they need to cut rates in order to avoid disinflation if disinflation is about to come. And we have deregulation, we have Clarity Act for crypto. So once we have these kind of things, it basically gives the market the opportunity to flourish. It's basically like a plant. When you plant a seed, you give them fertilizer, you give them enough water for nutrients, and the soil is good. Imagine the soil is the monetary policy and fiscal policy. And if everything is everything the seed is getting is good, they're going to grow into a big plant if taken care well, if there's a good environment. And this is the kind of environment Trump is creating. Obviously, all of this can change with an external factor. Yeah, let's say like COVID, something like that happens. We don't know. Yeah. So if there's no external factor, it's all right. It's good. It doesn't matter. It's going to happen. I don't know any other reason why we're not going to pump in 2026. Yeah. It doesn't make sense for the market to not pump when we have so many economic improvements coming in. So we have discussed a lot of stuff. I will also discuss the kind of trades that's going to work in the year 2026. I don't blame people for following the 4-year cycle theory because this has happened every single time. And I don't blame people for using 50-week moving average as an example. And like I said, Benjamin Cohen is a legend and this argument came from him. So I don't blame these people. But at the same time, if you don't use confluences, if you don't see macroeconomical reasons, if you have all of these massively good conditions supporting you and you just simply choose to ignore them, then you're an idiot. I'm sorry being harsh. You're an idiot if you're basically just considering 50-week moving average and 4-year cycle without any macroeconomic conditions. No one can argue that macroeconomic conditions are improving. No one can argue that. And I think Benjamin Cohen's theory is basically we might go somewhere like this and then go here. It's not going to be a traditional bear market, and then we're going to create a new all-time highs over the next 4 years, blah, blah, blah. That's, I think, what he says. Now, a traditional bear market, and this is something that baffles me. If you're talking about 4-year cycle, then you should also take in count Benjamin Cohen's double standards. I respect him. You know, he's definitely got more experience than me in the market. And he's been right for a lot of in the year 2026 about crypto because he's been talking about how you should be Bitcoin allocated in 2023 and 4. And you had many altcoins that did well in 2023 and 4. But 2025, he was all right because Bitcoin dominance went up not because Bitcoin was pumping a lot. It went up because altcoins were dumping a lot. But he was right about being just in Bitcoin in 2025. And he's been right about a lot of stuff. So, but as he's a human, just like us, humans make mistakes. Back in 2021, he used to make lengthening cycle theory, which basically, I think, the irony is, technically, I'm kind of making the lengthening cycle theory right now because of ISM and business cycle getting extended. Yeah. So he made a lengthening cycle theory. According to him, we were going to make a new all-time high at the mid of 2022, I think, and then the bear market. And that's technically what I'm saying right now. But I think he made a lengthening cycle theory one cycle before the actual cycle in which it happened. Because he was talking about how Bitcoin matures as an asset and how institutions' involvement is going to reduce the volatility, blah, blah, blah. And that's technically, what it is, what is happening right now, because institutions are involved here. Back then, there were not a lot of institutions. That's what he basically expects. I don't expect that. What I expect is that, like I've said before in this video, and I've said this before in many videos on Instagram, that I think this price action is like March, April of 2025. We could sweep that low. I wouldn't mind sweeping that low. In fact, this is what I want. Like the price should go down a little bit, not that much down. Maybe, like something like boop, and then we go up. Obviously, it won't be a straight line up. And even if we do something like this, and then we go up, it will still be all right. Yeah, obviously, it's not going to be a straight line up. So let's see what happens, and there are other bullish reasons why I'm really bullish, because we have a massive amount of bids right here. And this is something that you cannot argue against. We have bids all the way to 70K. Like, the whales are hungry. They want lower prices right now. Like, they want to buy lower. So we have massive amount of bids right here. These are like billions of dollars worth of bids. You cannot argue against this. This is actual data. Now, this is basically, for people who don't know, this is heat maps. This basically shows you orders. Now, this is on Binance. I will also show you on Coinbase. These are orders created by the whales to buy Bitcoin at these prices, and it goes all the way to 72K. Now, it doesn't mean that all of these prices need to hit, and not always do they hit, because this is the same thing. You can see this is the same kind of buy wall or bid wall below the price, just like tariff days during Liberation Day. The prices, the bids went all the way to $64,000 right here. And currently we are seeing some bids towards 50K, maybe some kind of delusional delusional whales here. But a lot of these did not get filled, and the price went up. The price bounced from 74K. So if anyone had a bid till 74K, they got it and the price bounced. And the same thing happened before that, when the bids went all the way down to $37,000 right here. And you can see lots of buying walls right here, and it pushed the price up. And the same thing goes for the upside too, So it's basically, that's one of the reasons why I said that this is the same as this and this. Buying walls, obviously these buying walls were more than this one and more than this one. But these are lots of buying walls. This was a little bit less than this, but I think this is more than this. Or maybe this is a little bit less. This is a little bit less. But there are buying walls here, and the whales are supporting the price. If this didn't exist, we would be lower. And we're holding up well. There could be three scenarios that happen here. Okay, the price goes up, these get removed, just like they got removed here. The price went up. Okay. The other scenario is these get filled, which hasn't happened in this bull market. Like all of them don't get filled. These get filled, and then the price goes up. Okay, which is the second scenario. It hasn't really happened in this bull market before. The third scenario is all of these get filled and the price goes down. Bitcoin doesn't care about the whales bit, which is unlikely. The fourth scenario is the whales just randomly remove all of this and then the price goes down. Now, these don't look like spoofs to me. These don't look like the kind of spoofs. Are basically the buying or selling walls that keep the price up or down for a short period of time. They're not intended to actually sell or buy. Like, for example, this was spoofs. It was to push Bitcoin above $83,000, and it went to 94, and then they removed it once it went up to 94 or 5. Yeah. So these were spoofs. These were removed. These were spoofs. These were removed when the price went down. These could be spoofs. But these were spoofs. You can see it was created to push the price down during this day. And so spoofs are created in order to keep price up or down for a short period of time. So these don't look like spoofs, because these bids have been here for like almost a month, and I hope that they exist for like at least a month or more, at least until Bitcoin goes up crazy. Yeah. So currently we have clear sky until 94, 95. These can get filled. Basically you can see these sell walls. Bitcoin don't care as much when it's an uptrend. Yeah. So, basically Bitcoin is not going to care about these small sell walls, but these buy walls, these are significant. There was probably spoofs here too, and they got removed. The whales are supporting the price right now. So I don't think we're going to immediately die from here, even if we're in a bear market. But I don't think we're in a bear market. Key point. Now, I can also show you Coinbase, you can see the buy vaults go all the way to $70,000, and it's the same as the tariff days. You can see, even on Coinbase. Coinbase and Binance are like two biggest exchanges in the world, so yeah. Not all of them need to get filled, just like not all of these sell vaults got filled. And just like right here, not all of these need to get filled. It's the same as last year, right here and right here. So yeah, I mean, the whales are supporting this level, we could even go to 79K and still be okay. I actually want us to go there, even though that's gonna make people go crazy. Like, oh my God, we're dying. I see the extremes every single day. When Bitcoin goes up, people are massively bullish. When Bitcoin goes down, people are massively bearish. That's what's happening right now. And I understand that. I can't blame those people. 2025 was a shitty year. Gold went up like 70%. Silver went up more than 100%. AI stocks went up like 100% each. S&P 500 was up like 20-30%. NASDAQ was up same or maybe a little bit more. Everything was up except for crypto. 2025 was actually shit for crypto. But that's where the business cycle point comes in. The only reason why S&P and NASDAQ were up was because of AI stocks, and you can't deny the demand for AI. And secondly, the only reason why gold and silver went up because China is buying hundreds of billions of dollars worth of gold I think as a trade war against USA. And same for silver, and also because of currency debates when trade. It's expected that Trump admin is gonna make the currency's value, basically USD's value, dollar's value, go lower. And I think it might go to this 89 to 92 range, somewhere here. Okay, so it might go to this range, which is basically a lot for US dollar. And it's enough for the stock market and the crypto market to pump. Apart from that, we also have IWM breaking out. Currently, it's a little bit down. You can see on the monthly, it's a little bit down. We could end the month good. I hope we end the month good. But currently, it's trying to break out. And once I think, I don't know when Bank of Japan is going to increase the interest rates. Maybe they did today. It's going to be a little bit spike. We're going to have a little bit downside because of it, but we've survived that before. It's not going to be much. And I think the rate cuts and money printing is offsetting the impact of it. We had a rate hike last year by Bank of Japan. The market was all right. And we also had one at the start of this year, and the market made a new all-time highs after that. So I don't think it matters as much. So, and also Japan also announced $110 billion worth of stimulus. They've also approved it in their parliament or whatever exists there. So, yeah, the majority of politicians have approved it. So it has passed, and the bill has passed, and $110 billion worth of stimulus checks. So they're already stimulating the economy. The big misconception about Japanese carry trade, yen carry trade, is basically people expect Bank of Japan to randomly after 20 years actually grow a spine and basically try to save their currency. They cannot afford to do that. That's one of the reasons why they're increasing really slowly. They can't afford to do that. One of the reasons why they can't afford to do that is because Japan's productivity is going down. Their population is going down. There are more older people in Japan. Japanese people are not creating kids. They're not marrying. They're not giving birth to kids. Like, it's becoming rare. I think there are statistics that basically say that Japanese population is going to go half in the next 100 years. So it's that bad, and their productivity is not good, and they cannot afford to basically take liquidity out of Japanese stock market or basically Japanese economy, because if they increase interest rates, and basically screwing up their economy. They're in a difficult place. They cannot do the opposite of growth. You need to remember, every central bank in the world is willing to sacrifice the currency, which is the problem with fiat. Yeah, they're willing to sacrifice their currency for growth, and Japan cannot do the opposite of that. You would have to be foolish to think that's going to happen. That they're going to randomly grow us fine, increase interest rates at a crazy level, just like the Fed did in 2022. I see that kind of stupid opinions from people. This is not something that they can do. They cannot afford doing that. I don't know why people think that's going to happen. They cannot afford doing that because they've not done that for 20 years, first of all. They've been screwing up their currency for decades. So they're not randomly going to fix up everything. They could, but they're most likely not going to. And a lot of yen intervention bullshit. Yeah, I mean, it doesn't make sense. It doesn't make sense. It's not going to happen. They haven't done it for 20 years. They're not going to do it again, you know. And if they do it, they're screwing up their economy first. And if they want to do that, why are they announcing a stimulus package of $110 billion? They want growth. Their prime minister is going from country to country, telling people to invest in her country. So they want growth. Yeah, Japan is not getting that due to the reasons I mentioned. So yeah, and population directly correlates to growth, unless AI comes in and takes the jobs. But it's not happening right now for a lot of people. I mean, in USA it has happened a lot, but it hasn't happened like in a major scale. So yeah, I mean, they can't do it. Maybe when AI takes productivity in its grasp, then maybe, yeah, at that time they could do it. The world will change actually when that happens. The unemployment rate is going to go up. So right now, I don't think that's going to happen. Trump will have to reverse everything he did in 2025 in order to win midterm elections. And if he doesn't do that, I don't know why he won't do that. There's a reason why they're announcing tax refunds in Q1 of 2026. And there's a reason why Scott Bessent is announcing how he is going to work on appointings of Fed chairmans or Fed presidents, because if you want a Fed president, they need to live in that place for 3 years. That's basically he said, so that they can control who becomes the Fed president. So, you know, there's more of what Trump wants to happen from the Fed. And the Fed is an independent entity. So they don't want independence. They want it to be in Trump's control. And Trump wants lower interest rates. When you have lower interest rates, it works like magic. So, yeah, I mean, it's common sense. It's common economics. So when you have Bessent working on that, you have Q1 refunds of $1,000 to $2,000 for low-income people. $150 billion worth of liquidity, that is. And then the Fed is injecting $40-50 billion, is printing that much every single month and buying treasury bills with that. And then you have Clarity Act, you have everything. I think they basically engineered this in order to win midterm elections. I think that's the reason why, so that people don't keep on screwing up, so that Democrats don't screw up with the things he wants. Trump is pro-growth president. And that's why he was selected by the people, or elected by the people. In 2025, he did the quite opposite of what he promised. And I think it was to win 2026 midterm elections. And yeah, I think if Trump doesn't reverse this, 2026 is going to be a lot worse than what 2025 was. Yeah. All of this depends on what Trump does, what the Federal Reserve does. Yeah, so basically that's what all of this depends on. I think gold and silver are telling a story. Basically, if you check gold, you know, it's telling a story. It's trying to create a new all-time high. Copper, on the other hand, is also trying to tell a story by going up. And then silver also at the same time is trying to... Come on, look at silver, man. Up 5% today. Wow, this is actually insane. This is so insane. I wish Bitcoin did that much this year. But, you know, wishing isn't going to change anything. But you do get the idea. Now, let's talk about altcoins. I'm not going to mention any specific coin because I don't want to leak the stuff that my members pay me for. But I'm gonna only talk about Ethereum and the broader altcoin market. So we have IWM, that's basically like altcoins of the stock market. These are low cap stocks. And then I've already talked about Bitcoin, yeah. And there could also be a possibility where Bitcoin goes to 110K max in Q1 of 2026, and then Ethereum goes to like $6,000-7,000, and altcoins pump with it. The reason being that I think that Bitcoin dominance has topped. Currently, it's going up. It always goes up when there's a dump. I think Bitcoin dominance topped at 66, and basically Bitcoin dominance usually goes down. I think it's going to go down in 2026 because it makes no reason for it to go up in 2026, and unless there's a bear market. So yeah, I mean, we could say that Bitcoin is in a bear market and Ethereum is in a bull market and altcoins included. In that case, S&P 500 needs to be in a bear market because that's the correlation with S&P and Bitcoin is more. But I don't think it is. But maybe there could be a situation where this happens. I wouldn't be really happy with that because I want Bitcoin to pump too at the same time. But yeah, so yeah, like I said, Ethereum looks much better than Bitcoin. That's something I have to agree on. And I think it even looks better than Solana. This looks like, even if Ethereum goes here, it's a massive, what do you call it, higher low. And then the next thing is higher high. So Ethereum has already gone to 2023 levels in 2025. It doesn't need to go there again. It could, but it doesn't need to go there again. The reason why I'm saying that is because it has already made that imbalance. It has already filled that gap. Yeah, this gap has already been filled. So it doesn't need to, again, fill that gap. It could, but it doesn't need to. Yeah. And the structure basically suggests that this could be a higher low before a new higher high. And Ethereum is also one of the coins with the most bullish catalysts. We had the Osaka upgrade a few days ago. And we also have BlackRock's staking ETF that the SEC needs to approve. And the SEC approves almost everything. There's only one thing that the SEC never approved. But I think their record is like 200 something against 1. So it's going to get approved. It's almost guaranteed. So that's going to get approved. We're going to have staking on BlackRock's ETF. That's already such a massive upgrade. That's already such a massive catalyst. And yeah, QE or money printing favors Ethereum and altcoins. And like I've mentioned, IWM looks good. And we have others BDC. Now, this is basically altcoins against Bitcoin. Now, this month, it's been a little bit shady. It's not shady, basically a little bit red because Bitcoin dominance is a little bit green. That's basically what happens when Bitcoin dominance pumps. But 6 months look all right. It looks like it's bottoming. 6 months candle. Yeah, so I don't understand how when we have easier economy, we don't have altcoins pumping. Yeah. And monthly just looks bad a little bit, but I think it's all right. We are in a massive demand zone. Maybe by the year end, when Bitcoin goes up a little, we might have, others Bitcoin improving. Now, what's going to happen until the end of the year? I don't know. I'm not making any predictions for that because institutions, people usually take vacations. There's not going to be a lot of volume in the year end. It's not like 2024 when Bitcoin went crazy in December. So yeah, I mean that's what I think about it. Ethereum on the monthly look all right. We definitely need it to go up a little. Bitcoin looks better on the monthly. If I check Bitcoin, yeah, Bitcoin looks a lot better on the monthly. It might create a candle like this. And Ethereum, okay, this was April candle. It could create a candle like this, I don't know. But yeah, so Ethereum at one point in December looked really good on the monthly time frame. And Ethereum against BTC, sorry, I forgot about that. Ethereum against BTC is really important. Do I look at Bitstamp? Yeah. At one point it looked really good, but it looks all right. It looks like it's creating a higher low. That's what it looks like. It looks like it's going to pump in 2026. It has already created that bottom. It doesn't need to revisit that bottom again because it has already done it. Like it's like expecting Bitcoin to go to $15,000 from here. It doesn't make sense. So it has already done that. Bitcoin dominance has topped. There's easy conditions coming in for 2026. So I think that, like after Ethereum makes a bullish structure, we could have a bullish price action. I don't know if we're going to have a bullish price at the end of the year. That's like 12 days away. It's 12 a.m. already for me. I don't know if we're going to have a bullish price action at the end of the year, but I am confident about Q1 of 2026. That could be delayed to, but for the year 2026, I'm like bullish. I'm bullish for the year 2026, and a lot of it with 2026 Q1. Yeah, I'm bullish. It doesn't mean that Bitcoin will create a new all-time high on January 1st. Q1 extends to March, okay? So like in the next 3 months, something I'm expecting Bitcoin to do well. The reason why, because the market will be anticipating Kevin Hassett. Obviously, this can get invalidated if Kevin Walsh gets selected and he doesn't prove himself to be a dove and Trump announces some bullshit policy. If that happens, then everything I've said gets invalidated. Then yeah, what Benjamin Cohen said makes sense. But if Kevin Hassett or Chris Waller gets selected as the Fed chairman, I think that's going to be the catalyst. Like I said, there's going to be 2 catalysts: announcing the new Fed chairman and then Jerome Powell announcing his intent on resigning from the Fed governor. These 2 catalysts are like Trump winning elections. So yeah, I think these 2 things are the next 2 things that can improve for 2026, and it can basically make the market pump. And the market might pump until Jerome Powell retires, and once Kevin Hassett or Chris Waller takes the seat, it might be sell the news event, just like Trump taking the seat was sell the news event. I think that's basically what could happen. And I don't know what's going to happen in the second half of 2026. We could have a bear market in second half of 2026. I don't know. But let's see what happens. I'm not sure about second half of 2026. That's basically predicting like 6 months from now, 6-7 months from now. Yeah. So basically, you guys get the idea. Of course, none of this is financial advice. I'm basically using data in order to predict what's going to happen. Okay, this is not something I know. The misconception that people have about analysts is that maybe analysts see the future or something. That's not what happens. It's all data. We look at the data and then we go, okay, maybe this could happen, maybe that could happen. And I'm basing my bias based on that data. I'm basing my bias on the upcoming events. All of this can get invalidated if anything opposite of what I said happens. Because right now it looks like this is going to happen. Yeah, but if anything opposite of what I said today happens, then yeah, I mean, all of this can get invalidated. We could have a bear market and this could be the worst bull market ever. Yeah, but considering that doesn't have to be the case, like I'm giving the probability of a bear market like 20% and the probability of bull market extending 80%. So even with the 50-week moving average thing, basically if the 50-week moving average thing proves out to be right, I will look like a clown saying all of that. Yeah, but I don't think that alone justifies a bear market. We need some external factors. We need macroeconomic conditions. And if we're going to have a bear market, if we're going to have a bear market, it will be because of macroeconomic conditions. It will be because of Trump messing it up. That's economics. Of the Fed messing it up. That's economics. So a bear market or a bull market happens because of macroeconomics. It doesn't happen because of a 50-week moving average. So when people only use the Fourier cycle theory and the 50-week moving average theory, the Fourier cycle as if Satoshi Nakamoto wrote it on the code or a holy grail, or if it's like a prophecy, It doesn't make sense. That makes you look like women doing astrology, like Gemini, Libra, all that bullshit. So that's what it basically makes you look like. Try to think about it. Give me a reason why the Fourier cycle works before I even talked about anything. Like, ignore everything I said. Give me a reason why Fourier cycle works. You cannot give me a reason. You might say, oh, it happens every single time. Yeah, just because you flipped a coin 3 times and 2 times it was heads, it doesn't mean that the 3rd time it needs to be heads. It could be tails. The opposite could happen. And Fourier cycle is one day going to break if it hasn't broken it yet. And there's a lot of evidence that it has broken it. The only thing that worries me right now is because there are lots of influencers who are talking about how the Fourier cycle is dead right now. There was some who already talked about it. I basically a different reason for it. It was because of BlackRock institutions and all of that. It doesn't matter. Institutions don't matter. The reason why I'm saying Fourier cycle is dead for this cycle, it could be revived in the next cycle, by the way, is because of the business cycle. It depends on how the business cycle does. I think that the business cycle is going to get revived. Maybe we might have a lot of people in 2026 loving Trump. And I think the next I forgot about the next big trades. I was about to end the video. Okay. The next big trades of 2026. Okay. So one big trade is probably Tesla. Of course, I'm not going to look at it. I'm mostly into crypto, but I think Tesla could do well. It's breaking out of multi-year range. If it doesn't pump up to like 600 or 800, 600 to 800, I will be disappointed because if it just goes down from here. Because you're finally getting your time to shine, and especially with robotics. AI trade has exhausted. I think it could still go up. NVIDIA and Microsoft, Google, they could still go up. AI trade can still do well. But the next thing is robotics, and there are a few other trades that we can take. So Tesla is like the top robotics stock, and I don't know any robotic stock that is bigger than Tesla right now. So Tesla can do well, and it looks really bullish. The market structure is really bullish. So Tesla is breaking out of since first time since 2021. And Tesla is like one of the only Mag 7 stocks that hasn't done this before. And they're not big into AI too. They're big into robotics, not AI. That's why Elon had to create XAI to get exposure to AI, and the whole thing with him and Sam Altman and OpenAI. I mean, this could dump for like a few days maybe, but I think Tesla is going to be a massive, massive trade of 2026. That's what I think. You guys don't need to listen to me. You guys don't need to buy a Tesla. And robotics, on the other hand, is also going to be like robotics is one of the reasons why Tesla is going to pump. And robotics is going to be a massive trade for 2026 if the economical conditions are good. Apart from economical conditions, another trade you can take is gold and silver. I don't know. Silver is parabolic. I don't want to own silver. Gold could do well. You could basically find an entry price and get into gold. The other next big trade for 2026 is probably IWM or low cap stocks because of the stimulus package that we're going to get from Trump's admin and the Federal Reserve. So I think IWM is going to do really good. So the big trades for 2026 for me is Ethereum, altcoins, Tesla, robotics, IWM or Russell 2000 stocks, which is basically the low cap stock, and energy. Now, with energy, I'm a little bit confused because there aren't a lot of good energy stocks. Maybe I haven't researched them well, but energy is going to be like really big trade for 2026 because data centers are expanding. They're going to expand and they need electricity. They need water and electricity. So maybe some kind of nuclear energy. If we get that and there are stocks for it, then yeah, that could do really well. And oil and energy, like for 2026, like energy based on oil, gas, and nuclear. Now, energy-based trades are going to be like really good because data centers need energy. Yeah, they cannot survive without it. AI needs energy to work. Yeah, because AI needs electricity. Have you watched the movie The Matrix? How they use humans for electricity producing and stuff? You might have watched it. So AI cannot survive without electricity. If you turn the button off, they're done. Yeah. So AI energy is going to be really big. We know that AI is going to be really big over the next few years. So energy makes the most sense. I think some stocks for energy is probably Exxon. I think Exxon was one of the stocks. Exxon, sorry. Exxon, Mobil Corporation. It looks like it's gonna break out. Maybe it does. Exxon looks like it's gonna break out. Maybe it does well in 2026. This is a solid price action. Maybe it does. It has been consolidating since 2022. So yeah, I think Exxon could go up. Energy I think, is one big trade for 2026. I'm bullish on energy because of AI data centers. And like I've said again, the 6 big trades of 2026, Ethereum and altcoins, energy-based trades. It could be Exxon Mobil or whatever energy stocks you have, or nuclear energy if we get the approval for it. Number 3, we have IWM, Russell 2000 stocks. These are basically low cap stocks. Number 4, hard metal, gold, copper. I don't know about silver. Silver is really parabolic. Silver could still go up, but it's really parabolic. But gold, copper. Number 5, robotics. Find some good robotic stocks. There are many, but I mean, Tesla being the biggest one. I might even make videos on robotic stocks on my Instagram. So yeah, and number 6, we could take Bitcoin. So these are the top 6 trades that you can take for 2026 if we're going to have a bull market. And I'm bullish on these sectors. So yeah, I mean, they look really good. Really good. I'm not going to lie. Look at Exxon Mobil. If you bought this, I mean, you wouldn't have made money in the past 3 years, but you wouldn't even lose money in the past 3 years. Like, that's how good Exxon was. So I think I'm bullish on it. Obviously, with this, you can't make hundreds of percent because that's not how energy works. And Trump is going to have a heart attack if that happens. But you're going to make like 20-30% on this, and IWM the same thing. But if you go into lower caps, like the lower cap stocks, I think Nike is one of them, PayPal, they might even be doing horrible right now. So like these stocks, yeah. I actually drew a demand zone for Nike here. This was a long time ago. Okay, wow, when did I draw this? So yeah, crypto related products, Coinbase could do well, Circle could do well, stablecoin, yeah. And so these things I'm bullish on, low cap stocks basically. You can see that Nike is a good company, but it's been struggling since 2021. It's been almost 4 years. I mean, it's actually been 4 years. It has been struggling. This is how bad the US economy is. Except for AI, nothing is doing well. PayPal, everyone uses PayPal, yeah? And look at what PayPal is doing. You see this? Isn't this crazy? This is absolutely crazy. Like, this is how bad the economy is. So yeah. Okay, yeah. So these are the trades that I've mentioned that can do well in 2026. So yeah. I just realized my camera died. I was just recording for a while without my camera. But yeah, thank you guys for watching my video. Remember, this is not financial advice. Make your own decision, do your own research, and I'll see you in the next one.